If Bitcoin is money, what can you do with money when you have a lot of it? Well, what you tend to do is lend it back out to the economy so that other operators, entrepreneurs, businesses can use it to grow their businesses. And what do you get in return? Well, you get some kind of a yield, some kind of a return for the risk of sharing that out. So been in Bitcoin treasuries for a long time, been in Bitcoin myself since 2015, 2016, done quite a bit of orange pilling with family and friends, but now really focused on the enterprise adoption of Bitcoin on the balance sheet. So why would you rather borrow against your shares in MicroStrategy than your Bitcoin? Well, to borrow against your Bitcoin, you have to provide your Bitcoin to a custodian as collateral so that they can liquidate it. First and foremost, you have to have your own Bitcoin under self-custody. You have to create that position. That should be the first position that you work towards. In Bitcoin treasuries, you kind of see one of three different types of companies. You know, everything is prime for disruption, every different company. I want to own the company that already holds the Bitcoin.
Hi, Chase. How are you doing? Everything fine on your end?
Yeah, doing great. Great to be back.
Absolutely, yeah. It was awesome the first time around, so I was like, let's do it again. But before we get started with all the topics, maybe for the few people that haven't seen the first episode, haven't seen you around, give them some background of who you are and especially why you're excited about Bitcoin.
Yeah, so my current role is co-founder and CEO of Acropolis, and Acropolis is a Bitcoin treasury platform for businesses built on multi-institution custody. So that's a lot of words, but basically we help companies, corporates move to a Bitcoin standard and take into account things like best practices around custody, continuity planning, insurance, accumulation strategy, tax and accounting, basically every area of the business where it can benefit from Bitcoin's infiltration and making sure that they are kind of future-proofing their business and leaning into the Bitcoin moment as much as possible. So that's what we do at Acropolis. Before that, multi-time founder operating various businesses, including an Italian restaurant that's 19 years old and a ad tech business that I ran for a decade. And with those businesses, we also used a Bitcoin treasury very early on in the businesses, dating back to 2018. So been in Bitcoin treasuries for a long time, been in Bitcoin myself since 2015, 2016, done quite a bit of orange pilling with family and friends, but now really focused on the enterprise adoption of Bitcoin on the balance sheet.
What would you kind of say is the current status of, or the current state of Bitcoin treasury companies? There's so much talk about, there was the Suitcoin summer and like, there's like now a little bit of a less exciting time for treasury companies. And it was like very exciting in early of the summer. How do you, and also maybe interesting for people to know, it's like the difference between the treasury companies that are just having an operating business with profitable outlines and they just move the profit into Bitcoin versus the treasury companies that like don't have an operational business, or the operational business is relatively small towards the treasury company?
Yeah, absolutely. So in Bitcoin treasuries, you kind of see one of three different types of companies. One is the pure play that you're kind of talking about, which is basically just an arbitrage of the capital markets. How much money can we raise at how low of a, debt interest rate and deploy that into Bitcoin and let shareholders participate in that trade. That's the pure play. We don't work with a ton of those types of companies because they just tend to be less sustainable. And you have moments in time like now where MNAVs compress, and those companies really struggle to basically get the momentum and traction on the capital raise side of the business going again. So we tend to focus on the other two types of companies, which is a profitable, free cash flowing operating business that is basically deploying their free cash flow into Bitcoin as kind of a month by month or quarter by quarter DCA strategy. And when appropriate, borrowing capital to kind of advance that. So taking on accretive debt or equity financings based on the financial strength of the operating business. So that's the most common type of company we work with. And then there are companies that are kind of like MicroStrategy, where they are struggling to grow. Their margins are compressing. They have really intense competition in their marketplace, and they need basically a second act. and they're throwing the Hail Mary and they're using Bitcoin to try to revitalize employee morale, enterprise growth, excitement in the marketplace, using it as a marketing tool. So there's a lot of those types of companies too, which were basically floundering companies that were struggling to hit their next milestone and therefore raise their next round of, call it, investor Series A, Series B capital. And instead now they're taking what used to be capital sitting in traditional treasury assets, money market funds, et cetera, earning very low yields, and they're deploying it all into Bitcoin, telling that story, becoming best in class at kind of the shareholder communication side of the business, and having a nice second act for their company.
It's super interesting. I thought about that recently. You mentioned the two kinds of treasury companies. The one that is the pure play. The other one is that they have free cash flow and just putting that in there, or they have like limited cash flow, but they basically take from the operating business. And then I almost feel like a strategy is their own kind of treasury company, because they were so early and they're so advanced with their how many Bitcoin they're holding and what they are able to do with those kind of strategies. Do you see it kind of similar that like strategy is so unique in terms of treasury companies because they have been able to raise so much capital so early on that it's so weird because it's a pure play, but they still have operating business and they have been so early. So they accumulated already so many Bitcoin, even if even if it completely stopped working, everything for them, they still have so much Bitcoin to back strategies out and like to survive for a very long time. Is that a fair assumption that they are kind of in their own category?
Yeah, I think they will forever be in their own category. I think Strategy has essentially already won the game of becoming the central bank for Bitcoin. I think that they're going to continue issuing digital credit and other securities and other instruments, and they're basically going to provide the lower risk yield for people who want exposure to Bitcoin's appreciation, but maybe don't want to take on the entire volatility risk or custody risk. So yeah, I think Strategy is kind of in a world of its own, created this new company of basically the central bank of the scarcest digital commodity ever to exist.
So similar to how the central bank kind of was created on top of Bitcoin, on top of gold, they kind of will do the same thing for Bitcoin. So like they will provide services for individuals and businesses, creating yield and all of those things.
Well, yeah, I mean, if you think about it, if Bitcoin is money, what can you do with money when you have a lot of it? Well, what you tend to do is lend it back out to the economy so that other operators, entrepreneurs, businesses can use it to grow their businesses. And what do you get in return? Well, you get some kind of a yield, some kind of a return for the risk of sharing that out. Now, MicroStrategy, now Strategy, does this in a different way where they're not actually encumbering the Bitcoin itself. They're never actually lending out the Bitcoin, but they're basically lending out the return or a portion of what they think of as kind of a go forward 20-year, 30% compound annual growth rate. They're kind of lending that 10 to 10.5% out through instruments like STRC and taking whatever the gap is and basically taking on the risk that Bitcoin will at least perform at 10.5% over the coming years. So yeah, what you do when you have a lot of money, you can either sit on it, or if you want a greater return outside of just the appreciation of the underlying asset, you can lend it back to the economy in certain ways. And I think Strategy is doing it in a very risk-off way. I think it looks really risky to the outsider, but for those who understand Bitcoin and understand the moment in the kind of S-curve of adoption that we're climbing through, betting that Bitcoin will return 10% year over year for the next 20 years seems like a bet that I would take. And Strategy is going to massively benefit through the gap in the 10% to what might end up becoming more of a 50% compound annual growth rate. And that 40% gap, that 40% return is going to go to the MSTR shareholders, who you can almost think of as, for the first time, owners in the central bank.
That's super interesting. Because if you think about it, either, like I think Bitcoin only has two logical outcomes. The one outcome, it fails miserably. Like it's just like we overlooked something and Bitcoin just vanished. I would put it as like a 0.01% chance, but like there's a non-zero chance that this happens with everything. And the other outcome is Bitcoin completely revolutionizes everything in finance. I think there is not a real other outcome than that, because if there's another outcome that it just stays what it is currently, I think eventually it will fail. Eventually it will fade out. If that's 50 years, 100 years, whatever, but eventually it will fail. And so in a way, if strategy taking that bet on Bitcoin, they are benefiting if they're going as all in as possible. Because if it fails, like it anyways doesn't matter because the whole thing fails. And if it wins, they're winning very, very, very big. And they are benefiting from that 20, 30, 40, 50% that they are. Now for individuals, because this is always this question. Like I had Seyr on the show. I was at his house. And I looked at strategy for so long already, but I've never decided to buy. The main reason for me is because I just want to be in control of my own Bitcoin. Like that's just like literally the only reason where I'm like, yeah, I might get that they are outperforming Bitcoin, maybe even over long run, maybe not, like whatever. But I rather own the UTXOs. I rather own my own Bitcoin, and I always chose to not do that, even though I saw I saw that they outperformed Bitcoin over the last 5 years. I have been in Bitcoin since that time, unfortunately, and it would have been a great choice to like put a little bit into strategy, but I still did it because of the freedom aspect. Now, for individual, how do you see the strategy between holding Bitcoin in self-custody versus having some maybe riskier plays in treasury companies?
Yeah, it's a good question, and obviously a big point of contention where a lot of the OG or hardcore, self-custody only Bitcoiners are taking issue with Bitcoin treasury companies. I think the right way to think about it is, first and foremost, you have to have your own Bitcoin under self-custody. You have to create that position. That should be the first position that you work towards. I do think there is a certain point, though, where your self-custody position can get to a point where you feel good enough about it that maybe you want to diversify the custody risk away from yourself. We talk a lot about self-custody as having no counterparty risk. Well, it's true, there's no separate counterparty, but now the risk is on yourself. And so if you're somebody like me and you have a wife or children and you want to make sure that the asset gets passed down properly, no matter what happens, if you were to somehow make a mistake with your self-custody situation, having equity in Bitcoin treasury companies is another way to kind of diversify to make sure that your family will be taken care of. And I think the best argument for why you would want to own both is that if you plan to never sell your Bitcoin, which I would assume that you and I intend to do so, we intend to probably borrow against the Bitcoin collateral when we need liquidity in the future, then yes, it's true that Bitcoin is pristine collateral, but the market does not yet see it that way. Whereas if you wanted to borrow against an equity like MSTR stock, you can actually get much lower borrowing rates because it's just more established, more understood within the kind of collateral landscape. So if you intend to never sell your Bitcoin and you intend to borrow against the asset, then I think there are some advantages to owning something like MicroStrategy and borrowing against your shares in MicroStrategy, and using that for liquidity because you can get a lower cost of capital, lower borrowing rate if and when you want to borrow in the near term. For the long term, I do believe that the cost of borrowing against Bitcoin will ultimately be the lowest because it is pristine collateral. But for the next 10 years or so, while the market still tries to figure that out, I think there's value to that. And then also, honestly, I just want to participate in the story. I mean, it's very rare to know, and I know this, that strategy will be the biggest company in the world someday, and to be able to buy stock in that company. Like if you knew for sure that Apple was going to be the biggest company in the world someday, you might have still wanted to buy nothing but Bitcoin, but you also might have wanted to participate in that story. And so for me, as somebody who works with Bitcoin treasury companies and is fascinated by the financial engineering and the growth of Bitcoin on the balance sheet, it's just a story that I want to participate in and root for, even if it really started as a small percentage of my allocation.
Super interesting. Because like it's true, like it's all those borrowing against the Bitcoin. I'm like, those rates, those terms are horrible. like why would I do it right now? It's like actually better either to just get a normal loan. I think most people would just get a normal loan with a bank without borrowing against it for better rates, for better long-term vision. I think Seyr actually was, I think, last year or I think this year maybe in Prague, where he presented the credit chart of saying, hey, like how long should your credit duration be and how long should it and what should be the percentage. And I think the sweet spot is above 10 years and under 10% of interest rate, where like not the sweet spot, but where it gets good under if you have under 10 years and over 10% of interest rates, it's kind of like getting to a bad position. And if it gets over 10 years and under 10% of interest rate, it gets better and better. Obviously, it depends also like how many assets you have, the income, and like the credit and loans are a lot more complicated than that. But in general, I look at the current offers that people have, that the companies and services provide for borrowing against the Bitcoin, and it's like, oh yeah, 12%, and it's for the next 2 years. And I'm like, I don't like that. That doesn't sound like a good deal. And I also have to give up my Bitcoin. I don't want to do that. And also there's always the platform risk, like the platform can also go bust. We have seen it in the past so many times. So if I take risks, at least I want to have better terms with my with my Bitcoin, and then I probably get a loan for like 5% also somehow.
Well, that's kind of the other piece of the puzzle. So why would you rather borrow against your shares in MicroStrategy than your Bitcoin? Well, to borrow against your Bitcoin, you have to provide your Bitcoin to a custodian as collateral so that they can liquidate it in the case of a margin call or some call it crash below your 50 or 60% LTV. So if you're borrowing against your strategy shares, though, you don't have that risk of the shares disappearing because, again, it's not this, this finite asset. It's just shares listed next to a name in a ledger. You're going to get those shares back. So there is less risk when you don't have to post your Bitcoin as collateral if you're posting shares as collateral. So that's another benefit. Now, again, caveat for all the haters out there, you have to get your Bitcoin self-custody position first. First and foremost, you want to be a self-sovereign individual. I personally have 3 passports, 3 citizenships, live in places all over the world. And so you need a global asset that is going to protect your wealth and doesn't take that counterparty risk, no matter what happens to Seyr and the executive team, or even theoretically a nation state seizure of Strategy's Bitcoin. So there are risks there, but there are also advantages to participating in some of these Bitcoin treasury companies. Personally, I only own Strategy. I believe that there is a network effect, that there is kind of a one winner take all situation here. And so I only participate in Strategy. And to be very clear, I got in at much, much lower prices. I've been in Strategy for many years already. So I do think that we're at an interesting point in time right now for people that are getting in. But I also understand if you were buying at 500 or 450, that this is probably a painful moment for you right now.
I mean, it's actually an interesting moment in time because if you look at Strategy, so that I'm not the only one looking at the chart, I can also show you and the viewers. If you look at Strategy, and whenever I talk about stocks, I want to just say this is obviously non-financial advice, but it's really interesting because we have seen, of course, the last 5 years it has done tremendously good, and it kind of exploded outwards. But then the last year it's down, the year to date it's down, the 6 months it's down actually tremendously with 40%. 1 month and literally any other period of time out of under 5 years. So it's an interesting time where if you know what Bitcoin will do in the coming years to come, and you also know what is possible, like if you ask yourself the question, if I think Bitcoin will become that thing, what is the company that will benefit the most? And now you just say it as like, it's almost like logical that strategy will be a huge winner of that whole market, outside of like Tesla getting tomorrow in the game very aggressively and all of a sudden buying like 700,000 Bitcoin, even though I don't think that will be easy. But is there any case for any other company, if we assume Bitcoin will be as successful as we all think it will be, to make an equity play in any other company than like strategy right now?
So I wouldn't name any other companies, but the advantage to buying a Bitcoin treasury company in the public markets that has a smaller market cap than strategy is that you have the potential for greater returns because it's a smaller base that it is appreciating against. So for example, if you got into a company that's only worth $1 billion today and it grows to 10 billion, that's a 10x. Whereas adding 10 billion to strategy's market cap is gonna it's gonna be maybe, yeah, it's not gonna, you're gonna do less than 50% return on that. So that's the advantage to getting in, but again, you're taking greater risk because you're owning the company that doesn't have the most Bitcoin in the world. And so I think a lot of folks overthink the strategy trade. And I will go ahead and call it a trade because at the end of the day, you are hoping to make more Bitcoin and eventually sell out of your strategy position unless you choose to do what I plan to do, which is just borrow against the shares forever and never sell. But a lot of people look at this as a trade. And this is the way that I would really simplify strategy. If you believe that Bitcoin is the future of money, what company is going to own the most of the future money? And how could it possibly be that the company that owns the most money in the future is not the biggest company in the world? So I believe that strategy has run away with the title of owning the most Bitcoin out of any company in the world. And so we're really just in this moment of time where they've already become the most valuable company in the world, but we're waiting for Bitcoin's price to correct to what we know probably the more fair value price of Bitcoin is. And at that point, I would expect strategy to be a $10 trillion company and just continuing to grow from there.
It's interesting because if we look at, can I put this here? I cannot put this here. I cannot put this here. But I just looked at like what is the currently biggest company in the world, and it's Nvidia with where did it go? 4.8 billion, trillion or something like that. So like almost 5 trillion. It's coming closer to 5 trillion. It recently got over 4 trillion. And then you see strategy is now at 68 billion, which is a lot less. I quickly calculated that's a 70x. Like this is like a lot less because we think strategy is huge. But then actually when you compare it to the biggest companies in the world, to like the Apples, the Nvidias, the Googles, the Facebooks of the world, it's actually not that huge of a company at this point. So if we both assume is like, yeah, if it gets to the point that Bitcoin is global money and the biggest company in the world will be the one that owns the global most of the global money, then it's just a natural play that it will succeed and be at least the $5 trillion. And you said before the $10 trillion. It's a really interesting perspective. I've never thought about it in that way, that as an equity play, of course, like as we said, like first on actual Bitcoin, but as an equity play, if you want to have the biggest company in the world in the future, that because it has the most global money, then it's an interesting, like you made me, gosh, you make me almost buying a strategy today.
Well, yeah, it's not a bad day to buy, and not financial advice, but I might have to nibble on some more shares at this point. But what's interesting is you kind of compared strategy to the Apples and some of the largest companies in the world, And I think it actually is fair, even at a $68 billion market cap, to compare Strategy to those companies, because Strategy actually has the fifth largest treasury out of any company in the world. They actually own as much capital on their balance sheet as the fifth largest company in the world. And so even though they are only worth 68 billion, they have a larger treasury than Nvidia, for example, which is valued at more than 4 trillion. And where I think the risk with something like Nvidia is compared to Strategy, and you know, where I think we have mispriced risk in the space, is that a lot of Nvidia's valuation is based on their ability to continue to grow and to continue to earn revenue that does not yet exist within their company. And they constantly have to reinvest in CapEx and infrastructure to continue to go grab that next quarter or that next year of revenue. So that's forward money that they don't yet hold. Whereas with Strategy, they already own the money. They already are holding the Bitcoin, and they're basically being valued at just the money that they already have. And therefore almost discounting this idea of kind of the central bank and securitization of Bitcoin or digital credit that I think is really valuable and really innovative, and that they have run away with as the number one kind of Bitcoin treasury company. And so, yeah, ultimately, I think you have to look at Strategy and say, okay, they already hold the fifth most money out of any company in the world, yet they're valued, you know, an entire order of magnitude less than any of the other players on that list. And those other players on that list are holding traditional treasury reserve assets. So as Bitcoin performs, and again, this whole thing is based on the thesis that you believe Bitcoin is going to go up forever, then Strategy's position in that number 5 spot of the treasury is going to massively outpace the 1, 2, 3, and 4 spots in the treasury. And ultimately, in this unknown future where we have tariffs, trade wars, countries are moving to things like BRICS, leaving the SWIFT system, international conflict. I think you want to own the company that actually already owns the money, especially in a world of AI and disruption. You know, everything is prime for disruption. Every different company. I want to own the company that already holds the Bitcoin.
I just had a thought. What about a company like Coinbase? I mean, obviously they don't hold the Bitcoin themselves. I don't know at this point how much Bitcoin they have because they're custodian for big ETFs and they are custodian for big companies and all of that. And I just looked at that and I was shocked actually that Coinbase has a bigger market cap than Strategy. But they have 85 billion and Strategy has like 68, I think was it before. So, that's like $17 billion more in market cap, which is a substantial bigger size, not like massively, but still substantial. Do you, and I'm not a fan of Coinbase at all, but as a pure equity play, as if Bitcoin wins in the future, is that a fair assumption? Is there any merit to that?
Well, I think what you're seeing there is that despite Coinbase having way less Bitcoin on their balance sheet than Strategy, but being valued at more than Strategy, is you're seeing a traditional investor mindset that is basically valuing revenue, traditional revenue, and applying a multiple to that revenue. And Coinbase makes a lot of money doing things like trade for Bitcoin and other coins on their platform. But it is always dependent on them remaining the leader and not being displaced by, let's say, Apple gets into the business of buying Bitcoin right through the iPhone or something like that. So this is always kind of a forward-looking thing. But this is how traditional investors in public markets are used to valuing companies. It's very difficult to try to value a strategy. But with that said, when I look at something like Coinbase, I personally believe that we are at the peak of centralized custodians. So right now, the ETFs, a lot of them and a lot of companies just park their Bitcoin with Coinbase. So even a lot of individuals still leave it on exchange at Coinbase. I think we are at the absolute peak of that. I think we're moving to a future where the asset Bitcoin is decentralized amongst multiple custodians so that you're no longer taking single counterparty risk. That's what we do for our clients at Acropolis is we recommend multi-institution custody where 3 institutions each hold 1 key in a 2 of 3 key quorum. We think that that's a much safer way to custody Bitcoin over the long term. And that means that either Coinbase is going to lose a lot of the coins that they're currently holding, or they're going to, at the very least, be one of the 3 custodians and have to share in the custodian-based revenue with 2 other custodians. And so I think we're at the peak for single counterparty risk in the Bitcoin ecosystem, and that does not necessarily bode well for Coinbase.
Interesting. Now, this was a bigger part of the podcast than I anticipated, but this is a really interesting thing because we do have to think about we are very, very sure that Bitcoin wins. And so we want to make sure that we have that almost inside information about what Bitcoin can be. Again, there's a non-zero chance that it will completely miss, it will fail. I don't think it will happen, but that's a non-zero chance. And if it does, I think we all as individuals have the responsibility to seeing, hey, how can I position myself, my family, and then in attention, maybe in attention from extension from that, also friends and families and all of that, ourselves the best way to benefit from that inside information, because we spend all those times digging into books, into podcasts. Then it's only fair of saying hey, how can I best position myself for the future that I currently see? And so I think looking at equities outside of Bitcoin is a fair play. Coming from someone that to this day only holds Bitcoin in self-custody might change after this call. I actually think maybe I'll just dabble in. We'll do a little bit more research. I cannot promise, but I think it's such an interesting thought of saying, hey, what if this Bitcoin thing works out? What if you also want to do some kind of equity play outside of just holding pure Bitcoin? And I think everyone is probably best off of having a huge portion of their money in Bitcoin pure. Then obviously make your keys really solid, make an extremely think about your Bitcoin currently and 10x the value of them. Are you still comfortable holding in your own currently set up? So if you're not, think about it again. But then maybe with 5, 10, maybe 15% of your portfolio, maybe you can dabble into something like that, like strategy or something else, what you is saying. Also another treasury company. But yeah, it's really interesting. Thank you so much for sharing that. I think I at least got a lot of from that already, and hopefully some of my listeners also.
Yeah, of course. And when you say this, think about your Bitcoin position. If it were 10x, are you still comfortable with your custody? That's something that we use all the time. It's a great line. It really makes people think. But the other piece of this is that, and maybe one other tagline that we often use is Bitcoin is past the point of going to zero, but your position can go to zero. And that's really calling out the fact that you've got the thesis right, but if you don't get the custody right, it won't matter in the end. It's no longer about will Bitcoin go to zero. It's about will your individual position or will your company's Bitcoin holdings go to zero because you mismanaged the custody piece of it. And one of the things I think we don't think enough about is when Bitcoin does 10x. Look, Robin, you're a very public-facing Bitcoiner. I'm a public-facing Bitcoiner. Even individuals who don't have a Bitcoin podcast or operate a Bitcoin company, they can't help but talk about Bitcoin to everyone they know because it's we want to help others along the way. And I think we need to be very realistic about the risk of personal attack and criminals starting to learn when Bitcoin is at $1 million a coin that, hey, this thing is a digital commodity. And if I just put a gun to, this Bitcoiner's wife's head and ask for the keys, I might walk away with hundreds of thousands or millions of dollars. And no one can take it away from me after the fact. It is this bearer asset that people are promoting, especially if you're out there promoting pure self-custody on public airwaves, you're basically telling criminals, hey, this guy or gal is holding Bitcoin in a way where if I come at them with overwhelming force, I might be able to take it from them. So that's where something like multi-institution custody comes along, and you can do it as an individual or a company. But the idea of having control of the Bitcoin without unilateral access to the Bitcoin, it can be a very valuable thing to discuss openly and publicly as a Bitcoiner, which is why I'm saying it now too. It's like, don't come after me for my Bitcoin. It's being held by 3 separate custodians, and there's all kinds of safeguards in place to make sure that I am not under threat before any of my Bitcoin moves. And I think folks really need to think about the fact that when you're self-custodying your Bitcoin, you might need to be self-custodying a barbed wire fence and a gun and all kinds of other security systems along with that to properly self-custody the Bitcoin as it 10x's from here.
I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washer, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
I have a lot of thoughts on that. First of all, I think in the case of someone kidnapping your wife and putting a gun to your head, it almost doesn't matter how you hold your Bitcoin, because if you really want her back, you probably like make the transaction somehow. Like that situation is like really like extreme. I hope it never happens in big ways to Bitcoiners. But if Bitcoin does what it does, we should think about even investing in physical security. I think we're not yet there. I think there's not like most Bitcoiners that were early lost most of their Bitcoin. I also lost a lot of them, even though I was not that early even. And so outside of those kind of situations where it's like gets really emotional and like it almost gets like a Netflix movie out of it, you 100% should really think about what if someone just comes to your house and just like randomly attacks you, like have something in place. Larry Lepard actually talked about that, was interesting because he learned it from gold, which has similar attributes. He said, have most of your money not even available at home. So like if someone comes to your home, they cannot really get anything. Like even if you wanted to give it to them, you can't give it to them. You can make that with multi-institutional, but you can also do this with self-custody. You can do this with all kinds of setups. And then he said something like, make a very small thing that you can give to them that doesn't make a huge, that is not big enough for someone to wanting to break into your home. But if they already are in your home, that they are kind of satisfied with that amount. It's like, okay, like at least that's like, give them like a small thing that you can, that doesn't hurt yourself and doesn't incentivize someone to come to your home. He's like, just something like, oh, like, yeah, here, have it. We don't call the police, like, just go. And so this was an interesting one. And I will say, because there are a lot of Bitcoiners today that are like, oh, I'm not a YouTuber, I'm not at risk here. There are so many KYC data points that got leaked into the dark web. Like, you might be a target and you don't even know about it, because it's almost from an attacker point of view. If you're a public facing guy, they almost assume, yeah, you have probably thought about it. Like if you are Michael Seyr, you probably thought about the security aspect of your Bitcoin, if your wife, if all of those things. I think he has no wife, but like that's another topic. But if you think about all the KYC data that is available to just buy, and it's like, hey, like those like 10 Bitcoiners all have like 100 Bitcoin. Let's see if we can find anything out how they stored it and like maybe where they live and all of that. And hey, there's some leak at what was the leak? Was it Celsius or was it FTX? There were some leaks where you can see how many Bitcoin and like what they have. You would be surprised how much of a target you are, even though nobody knows that you have Bitcoin. Even if you never told anyone, but you maybe used some KYC exchange at some point in your Bitcoin history, and then Bitcoin is at 1 million. You're like, oh, he had 100 Bitcoin at one point. Bitcoin is at 10 million. I guess he still has some millions laying around at home. Let's break in. Like that is a real freaking risk. So like even people that don't feel threatened should definitely, invest in that if they have the means to that.
Yeah, I mean, if you bought a Trezor or a Ledger or a seat stamp or even the Bitcoin t-shirt that you're wearing, Robin, like at some point you have probably made a transaction or shipped something to your home address that was Bitcoin related. You know, that's stored somewhere. That information is stored somewhere. We can hope that the data is being managed properly, but at the end of the day, it only takes something as simple as seeing that, Robin bought a Bitcoin t-shirt on Etsy 2 years ago to have a pretty good sense of the fact that probably Robin is holding some Bitcoin, right? And so this idea of self-custody and this broader idea of becoming your own bank, I would just urge people to remember that banks have an enormous amount of security that they found it necessary over many years to pay the cost, to have security guards, bank vaults, armed gates, armed guards, these kinds of things, security systems, fail-safe buttons, all these types of things that you would think of as a bank if you went to try to rob a bank. Those things exist because they tried to not have to pay the cost of the security over many years. And then bank robbers were getting away with a lot of the money. And it got to the point where they felt, okay, I do have to invest in the security of this asset. So if you're going to be your own bank, just think about what do banks pay for as well to secure the assets within the bank. And you're going to have to take on some of that security cost.
It's very good. I don't want to plug my own company now, but like we actually thought about that because we have a physical product with Microseed where you can stamp the seed phrase. And we really thought about that. And we were like, we will delete all data after 30 days when the customer got it. Because when we thought about it, it's like, it's just a matter of time till we get hacked. Like, I was in IT security before, and I know for a fact that so many huge companies with huge IT security budgets all got hacked. Like so many huge companies that you all know of is like, yeah, they got hacked, they got hacked, they got hacked. So it's almost like Elon Musk said that recently on the Joe Rogan podcast. There's no secure systems. It's just degrees of insecurity. And I love this quote as someone that comes from IT security, because the best way of avoiding your company to leak KYC data is to not have the KYC data. So you have to just delete your customer data after 30 days. So the only data that we keep is if you're opting into our email newsletter, like that, then you have your email address. Like that's the only thing that we are storing if you opt in actively in that. And I think that's just a reasonable thing to do, especially for physical products. I mean, obviously, like if you have some kind of ongoing thing and you are legally required to store KYC data, that's a whole different game and a whole different thing. But deleting customer data is the only way you can actually protect customer data.
Yeah, it's the ironic thing about KYC in general is it's the promise of protecting consumers, but in reality, you're creating a giant database that ultimately you cannot protect. No company, no individual, not even the government can protect completely from hack. And so I personally think we'd all be better off without KYC, but that's the world we live in.
Yeah, and there's here and there you need KYC. Like if you ship something, you need an address, of course. But I have an interesting one because I thought about that. If there is like now we have 200 publicly traded companies, and we've came from the first one being Strategy in 2020, being now almost like 200 around that number publicly traded companies. And I thought the small and medium-sized private companies will probably be in numbers way more. And I talked with a few exchanges here in Austria and Germany, and they all said like there are huge amounts of companies that all buy Bitcoin, but they don't want to have it publicly out there. And I found the reason interesting. The reasoning, at least for what I heard till now, and I'm curious what you say to that, is there is limited upside if you have a profitable business. There's limited upside announcing that you have Bitcoin on your balance sheet. If you don't, if you're not a publicly faced company, if you're not a treasury company, there's limited upside towards that. And there's some downside towards it because maybe there are customers that don't like it. There's those things. And you're like, hey, that's a financial thing. Like, why should we even tell anyone if it's just like not a marketing thing? So how do you see the company adoption side for Bitcoin on the private market for like small family owned businesses for those kind of things? And is my intuition right that there's a lot more out there that just not announcing it?
Yeah, that's absolutely right. One of the unique vantage points that I have into this space is where a lot of people who comment on Bitcoin treasury companies, they're purely going off of publicly available information on public companies. We work with a lot of private companies at all sizes and all jurisdictions. And yes, I can tell you that we work with a lot more private companies than we do public companies. And it's actually a lot easier for a public company to buy Bitcoin, not because it's a different button to click to hit Bitcoin, but because you're usually only building a consensus of one or two people. It typically is a family business where it's maybe a father and son, and the son is orange-pilled the dad, or it's a father or just an individual who has held Bitcoin for multiple years in their personal capacity, and now they want to see what it can do for their business. And that's really a unilateral decision of one, the orange-pilled dictator, as we sometimes refer to them within these private companies. And so, private companies are able to move a lot faster. Now, granted, they are not moving with as much capital, but to your point, there's less reason for them to advertise their Bitcoin position. One, because of risk of being debanked, Two, because risk of somebody misunderstanding that their Bitcoin is being held in multi-institution custody with Acropolis and thinking that they can come and knock on, the CEO's door and get access to the company's Bitcoin. And then C, there's just not much of a marketing benefit. Private companies tend to not be as consumer facing. Large consumer facing brands tend to get public because it adds to kind of the consumer marketability. Private companies tend to be more B2B or infrastructure based or commodity based companies, things that are operating behind the scenes and wouldn't benefit from a bunch of Bitcoiners coming to buy their product or service because they want to support the business. So yeah, there's just a lot more private companies that hold Bitcoin than people realize. The movement of Bitcoin on the balance sheet is absolutely already underway. And I think people forget and get distracted by the pure play Bitcoin treasury company. And that's why we hear a lot of negative sentiment towards these Bitcoin treasury companies. But at the end of the day, if you're a family run business and you want to protect your wealth and you don't want to get debased by inflation, or you don't want to have shrinking margins because you're afraid to raise your prices on your customers as prices on your inputs go up, then you have to own Bitcoin. Bitcoin is better money for everyone on the individual level and the organizational level. And so folks who are hating on Bitcoin treasury companies are probably too narrowly focused on the pure play Bitcoin treasury companies, and really need to understand that if you want businesses, which are the backbones of the economy, and folks who have poured their life savings and their risk and their labor into building a business that they might, pass to their next generation, or that employs hundreds or thousands of people within their community, you want that business to own Bitcoin. So you need to cheer for Bitcoin on the balance sheet, and you need to rethink this idea of Bitcoin treasury company from the pure play to what is really just a better balance sheet asset.
I love that. It's really interesting because I think there's so many businesses out there that just like want to buy Bitcoin. The CFO gets it, and because also private companies are tending to being more centrally controlled by a small group of people, and not like being this huge decision tree. So if someone gets orange pilled in the right position, you're like, okay, let's do it. It makes sense to go ahead and with that, depending on the size of it. But when you talk with all those companies, what is actually keeping them from adopting Bitcoin? What are the concerns that they have of saying oh, I want to wait with that, or their kind of challenges towards actually buying Bitcoin?
So whether it's a listed company or a private company, I would say the number one concern, whether the client would articulate it this way or not, is getting egg on their face. They know that they should hold Bitcoin. They probably hold it and have held it for multiple years in their own personal holdings, but they're worried that they're going to make a misstep, mismanage the allocation or the custody in some way that loses their team's trust. And, when you have leaders in these organizations, especially, private or public, you are the leader. Your company will follow you to some degree, but if you make mistakes, you risk losing their trust and your ability to really lead the company with conviction in a certain direction. And deciding to buy Bitcoin on the balance sheet is obviously still perceived, especially to a lot of employees in these companies who haven't done their homework on the asset class, as a very risky thing. And a private company or a public company does not want to wait for their entire employee base to be orange pilled before they can buy Bitcoin for their balance sheet. And so to a certain degree, they're acting unilaterally. They're saying, hey, we're going to do this. Get on board. I'll explain Bitcoin to you later, but we need to do this now for the company. This is the right decision. Follow me. And the risk when you put your neck out there like that as a leader is that if you put your neck out there in such a big way and you get it wrong somehow, you might lose employees. You might lose the trust. You might lose the ability to make another convicted decision like that in another area of your business later, because people call out, hey, remember when you got all excited about that Bitcoin thing and we lost 10% of our balance sheet? So I think it's egg on the face. And that's why a lot of companies, even if they're Bitcoin savvy, do want to work with a third-party partner like Acropolis to help them take into account every single step, because ultimately they want to work with a partner that has done this many times, seen the pitfalls, understands every box that needs to be checked to do this step by step in the right order with kind of another set of eyes over their shoulder. And so, ultimately it's the egg on the face. They just don't want to look stupid in front of the rest of their team.
Now, for how long actually are you doing it? I think like 1-2 years, like at least.
Yeah, we're at 1.5 years with Acropolis. But believe it or not, we are, I think we were the first company specifically helping Bitcoin treasury companies with their custody and advisory. So that's how new this space is. We've only been in the business for 1.5 years. But I think we were still the first in the entire industry. And still, there's only, a couple, like a very small handful of companies that are specifically focused on helping other companies buy and hold their Bitcoin. Because right now, the consumer industry is still seen as the bigger, more interesting, profitable venture. So you have a lot of companies like Unchained, Coinbase, et cetera, that do custody and will custody for businesses, but they're more geared towards consumers and individuals, and then they will help companies. We are specifically for companies that want to move to a Bitcoin standard.
Interesting. And how, I mean, now for 1.5 years, how much do you see politics actually matter and the macro thing of like, Trump said that, like, or like this is happening? Is that a discussion point of people now being more comfortable in companies, or is it just like noise that we tend to focus on too much?
I don't think a lot of business operators care too much about that. I think Bitcoin has sufficient cover from all of the regulatory bodies to know that they're not doing something illegal when they buy Bitcoin for their balance sheet. We used to hear concerns of like, hey, are you worried that Bitcoin is being labeled as Trump coin, or it's a Republican movement, and that when the Democrats get into office in the United States, that they're going to roll back a lot of these or be punitive to the Bitcoin community because they see the Bitcoin community as having helped elect Trump. What I like to say in response to that is that when Trump got elected, it was helped by the fact that he had a pro-Bitcoin policy. I don't think you will ever have another general election political winner that is not pro-Bitcoin. I think it is just too big of a constituency and too wealthy of a constituency as far as a potential donor base too, for politicians to ignore. And when you look at things like the Elizabeth Warren's anti-crypto army, there's just no benefit to being anti-Bitcoin. There's no like, oh, I'll vote for you if you're against Bitcoin. There is no contingency of that. But the more pro-Bitcoin policy that you promote as part of your political platform, the more likely you're going to get Bitcoiners to vote for you, because we tend to be single issue voters. Because for us, Bitcoin represents the fix of the entire system as well as our personal pocketbooks, and people tend to vote their pocketbook. So personally, I don't think we will ever see another political victory in a general election that is not actively competing to win the Bitcoin community with pro-Bitcoin policy. So that could be a Democrat or a Republican or an independent. I do think that we have crossed the tipping point now where the political class understands that the Bitcoin community represents a massive swing vote, because we are not politically aligned to one side in particular. We are aligned to Bitcoin. We are Team Orange. And we are a winnable vote if you come out in favor of policies that we support, like things like I would fully expect in one of these next general elections to have as part of the political platform, hey, no more tax on Bitcoin transactions. Bitcoin should be treated as legal tender. And I think that would be a massive, and correct policy to treat Bitcoin as money, and one that I fully expect the next round of political opponents and want to be presidents to start to promote.
I mean, we already saw it in the last presidential election where previously Biden was a little bit against it. And then when Trump moved so far ahead with the crypto play, even though I don't like that word, it almost seems like Kamala Harris then really went also into like, yes, we are for innovation. We are for that technology. And now it's almost bipartisan. Like there is still like a little bit of the Republicans are more loud about it. They're like more for that, but there are more and more Democrats coming out and saying like, hey, we actually like Bitcoin and we want the Bitcoiners to be with us. And so it's an extremely positive development that this thing is bipartisan and you cannot win an election based on being against Bitcoin. Like it just does not make sense. Because if you are saying out loud that you are against Bitcoin, you will lose all the votes of Bitcoiners. Like that's just a natural. But you don't win any votes from someone else. Like there's no group that you're like, hey, I'm against Bitcoin. Oh, I want to vote for you. Like who would that? Like you have to be for something that like maybe if Bitcoin really is successful, that someone says like, oh, we have to tax this rich Bitcoiners, might get some votes. I don't know. But I think we're not yet there at this point. And at this point, Bitcoin anyways has won. So like, there's nothing really to worry about.
Yeah, and then when you think about something like Coinbase and Robinhood or Square, or I guess Block and Tesla, and then soon Strategy joining the S&P 500, you're getting all of these people who don't necessarily know but have Bitcoin exposure now. And so this is like another area of the Trojan horse of Bitcoin is when a politician comes out and says, hey, we want to be punitive to Bitcoin. Well, there's going to be a lot of people looking at their stocks in the S&P 500 and they're going to say, hold on, like 10% of the stocks I own in the S&P 500 hold Bitcoin. We don't want punitive Bitcoin policy. Like that's going to hurt my pocketbook. And these are people who don't even understand Bitcoin or own Bitcoin personally, but they're sneakily getting Bitcoin exposure and they're going to not be anti-Bitcoin for that reason, because ultimately people do vote their pocketbook.
Super interesting. We talked about it before. I really literally still don't know his name, but the communist mayor in New York, I'll just call
Zoran Mamdani. Yeah.
What's your thoughts on this? Because like also I think there were like now 2 Democrats that won, and then him in New York. I forgot the 2 states where Democrats won, but basically there was now an election, and this was not a big election round. I think the midterms will be more interesting to see how Trump is doing in all of those. Do you see this communist thing and this non-progressive thing coming up strong and stronger in the world, or maybe like also EU and America?
Yeah. First, I'll acknowledge that running against kind of a political elite like Cuomo is just, Cuomo's a bad candidate. So it's not like there were that compelling of alternatives. And so any kind of young, spirited person who is going to throw a wrench in the system is going to be more appealing to somebody who's just providing more of the same to folks in New York City or New York and you know, the world and the country in general that are struggling to feel like they're participating in the capital system and building wealth because of things like massive student loan debt, increasing prices of groceries and gas and cost of living, and minimal, if anything, increases in their salary over time to kind of account for the cost of living increases. And so people feel like they're moving backwards. People feel like they're not only not getting ahead, but falling further and further behind. And I think if we're being honest as Bitcoiners, we all had that nihilism at some point too. I think to really become a Bitcoiner, you first have to lose absolute faith in the system and the ability to, for the masses to build and store their wealth over time and their hard-earned labor and energy into something that can protect their financial future and be passed down to their next generation. I think you have to get incredibly nihilistic and I would call it realistic about the current state of the world economy before you can appreciate Bitcoin, before you look at Bitcoin as this glimmer of hope that is worth investigating because you've given up on everything else already. And so I think that we are going to see a rise in socialism and communism because they are just people who have not yet found Bitcoin. They've to some degree identified the problems correctly. They're aware of the inflationary and debt-based fiat system that they're swimming in, but they have not found the lifeboat. So they think they're drowning, right? If you think of Bitcoin as the lifeboat that is, maybe 100 yards off of the Titanic and the Titanic is sinking, they think they're drowning. And they'll vote for anybody or anything that says, hey, I'm going to reach my hand into the water and pull you out. In reality, we just need to do more education. These folks need to find Bitcoin. They need to realize that there is a solution. And we need to do everything we can to make it so that Bitcoin grows faster in the consciousness of, the millennials and Gen Z, who are the ones that are, struggling to build wealth. We need to make sure that the Bitcoin virus grows faster than the socialism or communism virus. Otherwise, we're going to have a really nasty decade on our hands. But I sympathize with those folks. I really do, because when I felt like the system was absolutely broken and I was looking around for a solution, the solution before you find Bitcoin is become a full-time professional investor, risk your hard-earned money, and try to outpace inflation. That's not a very promising prospect. And so, hopefully these folks find Bitcoin. Hopefully we can get it in front of them and they can start to understand that capitalism is not the issue. It's actually the centralized economies, things like central banks that are printing money or large central governments that are running massive deficits, that is the reason that home that you want to live in keeps getting further and further out of reach every year.
That's amazing. I've never looked at it that way, because it's like they are right in the analysis that there is something wrong and something needs to change. I think that's what kind of connects Bitcoiners with socialists, weirdly enough. But I love the saying, socialists and communists are just Bitcoiners. They don't know it yet. That's freaking awesome. I think we that's such a great, like, we should almost print it on a wall somewhere. That's a great one. Could be actually, it could be even like, a title of a small article. I think that is worth exploring. But that's really interesting to think about, the politics and the minds of like where we are, because there is like two main camps. There's like the right camps and there's this left camp, and it's the middle camp is kind of like gone in the political landscape. I think and this is mostly because like people are fed up with the current system and they're searching either left or right to a solution. And now they're like, oh, okay, it's actually Bitcoin. And that's where like, there's this great chart that shows how much money each president printed. And it's like, okay, it doesn't really matter who's in charge. It's just like they will print money and inflation will go up. And so you have to find a solution outside of politics if you really want to have a nice life, if you want to afford your rent. Like asking for a rent freeze and saying like, oh, we have to stop all rent increases sounds very good for most people, because it's like, oh yeah, my rent is increased now every year. Oh, if we stop that, oh, then my costs go down. But it's a horrible thing if you know anything about markets, if you know anything about how the actual world works. But it just sounds such a simple and easy solution. And so I get frustrated with those things, but I think I understand why people vote for that.
Well, yeah, I mean, the socialists and communists or socialist and communist sympathizers, they feel the problem, they feel the symptoms of the problem, but they haven't diagnosed the problem, right? They don't understand that it's actually the political class printing gobs and gobs of new monetary units every year that is creating asset inflation, and that's why that dream house of theirs keeps getting out of reach. And the printing is outpacing the raises and bonuses at whatever job that they're at, and so they are on a treadmill that's moving them backwards every year. And it's in the political class, which tends to have one of the largest microphones in the world, for them to blame it on the Elon Musks and the Jeff Bezos and the capitalists, the greedy wannabe trillionaires of the world. Because ultimately, they have to create a boogeyman that is not themselves. They can't say, oh, it's our fault that we keep spending money on foreign wars and bloat and waste and inefficiency within the government. They're never going to aim the blame at themselves. So they have to blame it elsewhere. And they have these huge microphones, and they're capable of rallying up support for just about anything. And so you see an entire political party in the Democrats right now that is basically villainizing billionaires and trillionaires. We don't have trillionaires yet, but billionaires and would-be trillionaires, because of a fundamental defense mechanism that if they were to be honest about the problem being the political class printing money and running government in a bloated, inefficient, deficit spending way, and that is really the cause of all of the struggle that everyone's feeling in the world, well, then they would be, basically committing political suicide. And so, yeah, the socialists and communists, they are drowning, but they don't understand that the Titanic hit an iceberg. They haven't, they're just worried about trying not to drown. They're not doing the homework to understand, why is the Titanic sinking? What went wrong? What can we do to fix it? What is the solution? It's just save me now so that I can live and eat and breathe for another day.
Was there, because you told me that you moved to Brazil, was there any political intentions also in there, or was your intention for that?
Well, so the main intention was to make my wife, who's Brazilian, very happy by letting her live much closer to her family, and for our daughter to have a much bigger family around. I do enjoy a better cost of living here. I love Brazil, the people and the place as well. So there's a lot of reasons that I enjoy life here in Brazil as opposed to the United States. But Brazil has its political issues as well. There's a lot of things happening on that front. But what's nice about living in another country is you tend to not carry the weight of it as much. I don't pretend to know and be updated on, decades of Brazilian politics. So I can kind of just live in this society without feeling like I have too big a stake in every little political issue. So that's nice. And I was living in Marin County in California before this. That's where I grew up. That's where I'm from. And it is a very, very, very liberal place with a very, very narrow mindset. And, I'm no huge Trump supporter or politician supporter in general, but the level of Trump derangement syndrome that we were experiencing on a daily basis there, where you could not have a conversation with somebody without the first or second sentence out of their mouth being, Trump is such an asshole. It's like the amount of mental space that Trump is taking up in the heads of liberals in Marin County and Northern California, or California in general, is totally unhealthy and unproductive, and was just exhausting for us and my wife and I.
It's great. I hear that for so many people about California, that it's the worst. It's like this is the worst part, and that's why people go to Texas and Austin and what was Florida, I think, is also like Miami and all of those places where people actually flee from those countries, and then also the companies leave. Companies leave from there. Ah, God, that's why I think that's another small argument against real estate, because you never know what the politics will be in your
Yeah.
in your hometown. And so, like, buying real estate in your hometown can be very, very bad for you, because maybe there's just politics shifting, and all of a sudden that nice real estate actually goes down in value, especially measured in Bitcoin, actually also in gold. I brought yesterday in my live stream the gold chart in real estate on, like. There's a real estate to gold ratio, and real estate has gone down, measured in gold, the last 25 years in the US. And I mean, in Bitcoin, we know it, like real estate just crashes down since the beginning of Bitcoin, basically, almost every single year. And so it's interesting to think about that. But yeah, it's fun. Unfortunately, I almost overlooked the time. We are almost at the end already. And I have one question that I asked each and every one of my returning guests, and you are returning now as the second time on the podcast. And the question is, what have you learned outside of Bitcoin since your last appearance on the podcast?
If I take a second to think about this, just feel free to use your Riverside editing tools and jump forward. Let me think about that for a sec. So what have I learned since the last time? I guess one thing that I learned since the last time, and this is maybe a cop-out, is that a government shutdown does not affect me or other productive members of society. I think the people that we're seeing really upset by the US government shutdown are people who are relying to some degree or another on the government. And I think that people need to ask themselves if that is an acceptable position to put yourself or your family in, to be relying on a government that is $38 trillion in debt and has really no way of making good on their future promises. So I would say look around. If you are somebody who is affected by the government shutdown in any way, what are those ways and how can you mitigate against that and take more self-responsibility or self-sovereignty in those areas? And I'll bet you, most people that are living productive lives and are self-sufficient and financially literate to the point of not relying on the government, those folks probably are not even aware that the government shut down unless they're watching the news. So I guess what I've learned is that I can live happily without the government, and that everything still moves rather smoothly and keeps working as long as you are a producer and not a taker.
That's such a good point, because if you are really at the mercy of the government, and this is also again in what we've talked about in the beginning of the episode, if you know where Bitcoin is going, you know that the MSTR and all of those things, but then you also know that you probably won't do a good job if you're dependent on a government job. If your company is depending on government contracts, or if you are working for the government, there's a very high likelihood that your job or your connection to the government won't hold up, because they will be forced to save money. They will be forced to go down, as the printing of money will be either going away or be extremely limited, because now there's Bitcoin as an alternative monetary system, and governments will not live in this nice dreamland where they can just borrow and without consequences. And so I always tell these people that have government jobs or government relations, it might not be that safe as they think it is right now.
Yeah, no, I think that's right. You should not rely on the government for anything, because the government is absolutely operating in an unsustainable way. And so it's just a matter of time before your livelihood, your quality of life could be affected by the government's mismanage of their financial responsibility.
100%. now we have an end routine, as you know, in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what's your New Year's resolution for 2026?
Probably more fitness related for me this year. We have a 9-month-old baby, and so sleep and exercise has really taken a back seat over the last year. But now that we are surrounded by more family and help, and now that the baby is starting to sleep through the night better, I really want to get back in shape. The wife and I both want to start getting back in shape and being fit again, and starting to feel good again, because we've been sleepwalking through the last year. And so for me, yeah, it's going to be about taking the longevity of my health as seriously as I take the longevity of my Bitcoin holdings.
Love that. I think that's a perfect last sentence to the podcast. But before we let you go, where can people find you and ask you questions?
Yeah, happy to chat with anybody. You can find me at chase@acropolistreasury.com. That's my email. Or you can find me on LinkedIn or on X, Twitter at Chase Palmieri. And obviously you can find Acropolis at acropolistreasury.com and book a free consultation to learn about how we might be able to help your business move towards a Bitcoin standard and incorporate a Bitcoin treasury.
Awesome. Thank you so much for being on the podcast, Chase. Learned a lot. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.
This content is for educational and entertainment purposes only and does not constitute financial advice.